Hello, my name is Ivan, aka Armenia. I'm a professional trader with more than 10 years of experience. I'm a main trader in VTF Trading, where we share our trades in crypto, stock, and Forex market. If you want to join our great community, you can find the link below in the description or on our main YouTube page. Before we start, please subscribe, hit notification button, and like this video. Okay, let's start. Today we're going to talk about POI, it's like point of interest, and reversal patterns. This is the sixth block of our free course. So, what is POI? Zones on the chart from which there should be some kind of reaction. Zones of interest are the most important thing when traders creating a trading strategy, because these places on the chart will help you make money. These zones include everything where there was a struggle between market participants. Levels, order blocks, volumes, liquidity, trend lines, low highs, round prices on assets, Fibonacci retracements, various patterns, accumulation according to Wyckoff, accumulations, distributions, etc. You need to enter a position only from a point of interest and nothing else. Otherwise, you are trading air, because your task as traders is to determine the potential place of a rebound, impulse breakdown of a particular point on the chart, and with the right analysis, get a reward. Patterns. So we're gonna talk about three drive pattern. The three move pattern is a reversal consisting of a series of higher highs or lower lows. The most important in the third lows, it usually tests an important area of interest, after which upward downwards pricing begin. Often during the formation of three drive pattern, a classic divergence occurs, which can be an additional factor for the start of the trend reversal or correction. Entry into position can be carried out after the third minimum or maximum. Stop loss will be placed outside the zone of interest, where the growth started from. The next opportunity will be when a bullish bearish order block is confirmed. At the moment of confirmation or on its test, an entry into the trade can be considered. The stop loss will be placed under the block order. The third opportunity to open position will be after confirming the pattern, breaking structure on the high low or lower high flag formation. Stop loss will be placed outside the zone of interest from where the price receives a reaction. Don't worry, I will show everything here on presentation and also on live chart, so you will understand what I'm telling you. So as an example, on BTC 1 monthly chart, you see we have high after high, so three highs, and next high taking liquidity from previous high. Three top setup. The reversal pattern consisting of three movements. Unlike the three drive pattern, there is no third lower low or higher high. The pattern relevant to use when three movements are formed in a relatively narrow range. Consists of three main events: a low, high, low, and high formation, collection of stop losses for sale purchase, and retest, a return to the order blocks that was formed on the second movement. Usually occurs after the breakdown of the structure. Strong additional factors that significantly increase the likelihood of pattern processing are impulse breakdown of the descending ascending structure after the second movement, and the withdrawal of liquidity for sell buy as the discount premium market or close to 50% of the trading range on the third move. The most optimal entry into the trade will be on the third movement, when the price after breaking the structure will return to the test of order block. Stop loss will be placed under the block. Three-type setup is a simplified version of accumulation and reaccumulation of the second type according to Wyckoff. So this is an example. It's the schematic. As you can see, we have first movement, then we have second movement, the take liquidity first one. After this, we have break of market structure from in this case lower high. If we have opposite picture, it's gonna be higher low, and we broke it. So this one is the break of market structure. So it means we're gonna go high, and everything is happening in our point of interest. And usually on this movement, on like third movement, and the specific one from 2 to this high, we're creating higher high because we getting high previous lower high, usually with imbalance or with order block, and then we testing this order block or imbalance. Like perfect example of this, like as you can see, it's also, you can call it head and shoulders in classic TA. So we have like one movement, we have the second one, we create an order block, and after it we connect. As you can see, usually when we see this pattern, we don't have a choice to enter on like retest. So usually people waiting retest like after third movement, but price is going down like rapidly because we've been consolidating and we have like some position to enter. Also, as you can see, here on like 50 minutes we didn't have break of market structure, but we had it on like a 1 minute chart. Perfect example of like point of interest I've seen today on BTC. I posted chart about it in like our group. So we came into this fair value gap. It's a fair value gap from like 4 hours, if I'm not mistaken. Yes, fair value gap, and this order block. And I was thinking, I was searching for like entry here, and entry was on this order block, and specifically on equilibrium of it. As you can see, I marked it with this purple line, and we got like a reaction from here. After that, I've been waiting like for entry, for break of market structure. This happened on 1 minute chart, if I'm not mistaken. Yeah, this specific break of market structure, like right here. Broke it, and then we've been slowly going up. And after it, 1 second. Yeah, after it, as you can see, we had aggressive movement to nearest like liquidity. Probably we'll have like test to this fair value gap, which is like my point of interest right now, where I will be looking for some reverse like pattern. Also, we can try to find maybe like 3 top setup here if we try, but it won't be correct. But as you can see, you can find this, and we've been consolidating and testing this like trend line and going like lower. A good street drive pattern, it's kind of rare to see because usually price reverse with like 3 top setup, because it's the most common, because people don't expect it. But as you can see here, it was really nice example of street drive pattern. 3 top setup was an allied. Yeah, this one. It's better to see like 50 minutes. We have like 3 highs, high after high, and this is like most common setups you can find on the market, because usually people like don't expect like third high, they're taking liquidity from previous one. They usually see this like double top. On the classic TI, by the way, equal highs when we have, so in the classic TI, this is like double high, but this is completely wrong, because like it's equal highs, because people put a lot of like stops above these highs, and price more likely will do something like this and then nuke. So keep it in mind. So every time when you can see this like pattern, more likely we will go down. And as you can notice, we went down till this fair value gap on like 1 hour, and we went down, if you enter here, almost like 5% and with stop almost like 1%, or like more aggressive stop 0.5%, 1 to 8 risk reward. You just need to like look at chart and try to identify this like patterns, like 3 drive pattern, like 3 top setup. After you see it like couple like thousands of times, you will be able to identify them easily. About like point of interest, every trade that you open should be like in point of interest. So in some zone, you can just open trade. For example, you can't open trade here on Bitcoin because it can go up to this zone, to this very wide gap on 1 hour or on 15 minutes, or it can keep going lower. Because if you open like long position, let's say like here, if you open a long position, let's say here, it can just dump, just take liquidity from this like this local liquidity, and then go like up higher. That's why you cannot open long position here. You also can't open short position here, because we can just turn around and keep going higher, and without like any stops. That's why you better open position only in like point of it. It can be fair value gap, it can be order blocks, like we talked here on like 4 hours. It can be in like liquidity level. So for example, here trade on the euro, this internal liquidity. So we took liquidity from this low, and I opened positions. It was aggressively, without market shift, without break of market structure, without anything, but it was like key level, and I opened this trade. Same, I opened trade today on a Google, yeah, because we had this previous weekly high, previous daily high. We took liquidity from it, we got like reversal pattern, and on like 1 minute, as you can see, we had been building liquidity, and we just like broke here. I open position right here after we broke this like trend line, this one, and I just opened the position. My like it was low risk trade, and I just took my profit just right away as soon as we got to this level. It's always should be like somewhere, because you cannot open position like right here, because it's too aggressive, and you don't know, like, because market can just go down here. You cannot open like position in just some random place. It has to be like some key level. On the last video of this like free course, I will show my exact strategy, and I will do like step by step when you open position, like how you open position, and like how much you risk, etc. It will be like full video of my exact strategy, and if you will follow it, I can guarantee you like it's like 80-90% win rate on this specific strategy if you like master it.